Jeffrey Kraws, he's CEO and co-founder of Crystal Research Associates. So you expected the deal to be done. This is pretty much how you expected it to play out.
I did, and I think that one of the things we're going to see unfold more substantially is the cuts that will take place on both sides. Right now you're seeing a pharmaceutical company which is scrambling to try and offset the loss in sales and earnings by cutting into expenses. So in addition to the approximate $3 billion they expect to save by 2010, you can expect to see further synergies as they try and carve out of the Wyeth side as well. 8,700 jobs gone out of the 87,000. Be interesting to see how many jobs are gone out of the 47,000 on the Wyeth side.
How much more do you think, Jeffrey? I mean, you're assuming there's going to be more jobs cut, I suppose.
Oh, there definitely will be more jobs cut. I think they're going to cut more substantially. I think this is their initial pairing. They've taken that dividend, they've carved it in half. In order to achieve the EPS gains that they're trying to forecast, they're going to have to do two things. They're going to have to combine these two companies very effectively, really take advantage of the margin situation from manufacturing as well as selling.
Can they do that well? Can Pfizer do that well? This is a company, as we said earlier, Ellen was talking about, this has been their MO in terms of acquiring companies.
It's sort of a reverse for them because they were the ones who spent most aggressively on SG&A. They spent more aggressively on a higher percentage of sales on SG&A than any other company in the industry.
So can they do this then?
They're going to have to stop spending. They're going to have to direct that money towards R&D. I think they can do it because they want to make this financially work, but it's not their usual pattern. You're talking about a company who just excelled to the excesses in promotion, and now with Dingle and Waxman saying you're not going to be able to do anything else off-label as far as promotion, you're talking about slamming on the brakes. And I wouldn't rule out, by the way, they're going to slam on the brakes on spending and put it towards R&D. They spent $7.5 billion last year on research and development. They are still going to go after a biotech company. This Wyeth deal moves them to the forefront in biologics. It moves them to the forefront in vaccines. But do not expect them to stop here. A lot of these biotech companies that are cheap and inexpensive now, I'd expect them to pick up some of those as soon as they can pay for this and as soon as they can justify it.
What about the Dutch vaccine developer that Wyeth was going after? I think Kraws. Or you think that could happen still?
I think Kraws can happen later on this year. I think that would be a nice additive component to the vaccine manufacturing capability with Wyeth. Not necessary, but I think that they would resume talks, and if they can get it at a reasonable valuation, 1.6, 1.8 billion, I think they would pursue that.
What happens next for the other drug companies? You expect more consolidation?
Oh, I do. Now you've got number 1 combining with number 12. You can expect other companies to be looking. Certainly Sanofi Aventis is going to be more aggressive. We've seen recently pharmaceutical companies, Roche trying to complete its Genentech acquisition. You have Novartis trying to go after an increased stake in Alcon. You're going to see Merck try and step things up. You're going to see GlaxoSmithKline try and step things up.
Even in this tough environment, you'll see more consolidation.
Oh, yes, because what they're trying to do right now is they're trying to take advantage of depressed valuations, gain synergy and efficiency for revenues and earnings.